Hi guys, this is Dan from the Investment ABC, your guide to financial freedom. And in this video, I want to discuss the current dilution by Tesla, Xpeng and NIO. Tesla recently raised $5 billion in cash, Xpeng raised $2.2 billion, and NIO now followed with an offering of 69 million additional shares and raising $2.9 billion, increasing their cash position from 3.3 billion to currently 6.2 billion. Although Li Bin said in the third quarter of 2020 that no additional offerings are needed, NIO still went on and offered additional shares to the public. Until now, we don't know at which price they're doing that, but it will be lower than the current price, that is guaranteed. NIO declined around 7% after that announcement. That is approximately the same amount of the dilution. For those of you who don't know what a dilution is, it means that the company is creating additional shares and selling them at a discount to the market price to new shareholders. The amount of outstanding shares increases and therefore the shares the old investors hold is worth less than before, just because there is more of these shares available. Normally, companies are doing these kinds of offerings when the management thinks that the stock price is way too high and that it is a good opportunity to take advantage of these higher prices. I think that is exactly what the CEOs of these EV startups think. The EV market is so hot, it is almost unbelievable hot. NIO's market cap rose from around 3 billion last year to almost 75 billion, surpassing VW as the second biggest car manufacturer. I don't even think Musk or Li Bin would have ever imagined this if you would have asked them earlier this year. On the contrary, Musk tweeted a couple of times that he thinks the share price is too high, and that was in May before the huge run-up in EV stocks. Tesla's share price was at around $165, so I wonder what Musk would tweet now when the stock price is 400% higher. NIO was in March 2020 on the verge of bankruptcy with hardly any cash, so I think these companies are just filling their war chests for either future projects or bad times which might come in 2021 or 2022 when a wave of bankruptcies will hit many of these zombie companies once stimulus programs are cut. It is a surprise to me that NIO didn't wait until the release of the numbers and leading into NIO Day in January before raising additional cash to achieve higher prices. Either they are expecting a market crash this month or their numbers for December are weaker than expected. If you check out the growth rate of deliveries, you can see that it is declining from September on. We have to see how delivery numbers for December are going to be. I hope not weaker than expected. I already said in one of my earlier videos that NIO is currently priced for perfection and the slightest hiccup would send the stock price nosediving. Sometimes the stock is just running up too fast, too quick and has to retrace back for a while. That is totally normal. Many investors are upset now about the company or Li Bin breaking his promise, but the market gave him such a great deal that he couldn't say no. I like that NIO doesn't need to worry about cash anymore. The company can spend that money on R&D, which is important, or build a factory to achieve higher margins. In my opinion, it is too early for NIO to expand globally. The Chinese market is huge enough to grow and increase its efficiency. Long term, the cash infusion is a big advantage in my opinion and shouldn't worry investors too much. Don't forget that the company is still a startup and they need to raise capital along the way when they grow. If you like this video, hit the like button to support the channel, subscribe for 10 Bagger stock picks, share and comment. Bye guys and see you in the next one.